you're a U.S. citizen or green card holder living abroad, there's one thing you need to know. Living outside the United States does not automatically end your U.S. tax filing obligations. The good news? While the U.S. taxes worldwide income, most Americans abroad don't actually end up paying U.S. tax thanks to exclusions, credits, and tax relief provisions designed to prevent double taxation. Let's walk through the key things you need to know when filing your 2025 U.S. tax return in 2026. First, do U.S. expats need to file a tax return for tax year 2025? In many cases, yes. If your worldwide income exceeds the IRS filing thresholds, you'll generally need to file a U.S. tax return even if you live and work overseas. For the 2025 tax year, the filing thresholds are $15,750 for single filers, $31,500 for married filing jointly, $23,625 for head of household, $5 for married filing separately with a foreign spouse, and just $400 of net self-employment income if you're self-employed. Many Americans abroad are surprised to learn they still have a filing requirement, especially when foreign earnings convert into larger US dollar amounts. Now, not every expat files the same way. Certain life situations can change how your taxes work. For example, moving abroad during the year, working remotely for a US employer, being married to a non-US spouse, living in a country with very high or very low taxes. Each of these situations can affect the forms you file and the tax benefits available to you. Speaking of forms, which IRS forms do expats commonly need? Most Americans abroad will file Form 1040, along with one or more additional forms. Some of the most common include Form 2555 for the Foreign Earned Income Exclusion, Form 1116 for the Foreign Tax Credit, Schedule C and Schedule SE for self-employed individuals. Depending on your financial situation, you may also need to file foreign reporting forms such as FBAR, Form 8938, Form 5471, Form 8865, or Form 8621. These forms aren't required for everyone, but failing to file a required form can result in significant penalties. One of the biggest concerns expats have is double taxation. Fortunately, there are three major tax benefits available to help avoid it. The first is the Foreign Earned Income Exclusion, which allows eligible taxpayers to exclude up to approximately $130,000 of foreign earned income. The second is the Foreign Housing Exclusion, which may allow you to exclude certain qualified housing expenses. And the third is the Foreign Tax Credit, which provides a dollar-for-dollar credit for income taxes paid to a foreign country. The best option depends on where you live and the type of income you earn. If you're self-employed, there's another important rule to know. Even if you qualify for the Foreign Earned Income Exclusion, you may still owe U.S. self-employment tax at a rate of 15.3%. However, some countries have totalization agreements with the United States that may help reduce or eliminate this obligation. Let's talk about deadlines. Most expats receive extra time to file. Key dates for 2026 include March 15 for Forms 3520 and 3520A, April 15 as the standard filing deadline, June 15, which is the automatic extension available to expats, October 15 for taxpayers who request an additional extension using Form 4868, and October 15 for FBAR filings. Another important point is income reporting. The IRS requires U.S. citizens abroad to report worldwide income, including foreign pensions and retirement accounts, rental income, interest and dividends, cryptocurrency transactions, foreign property sales, and equity compensation. These are some of the areas where unexpected tax issues often arise. The good news is that expats can still qualify for valuable tax credits and deductions. These may include the additional child tax credit, the dependent care credit, education-related tax credits, and IRA contributions if eligible. However, some benefits can be affected when you use the Foreign Earned Income Exclusion, so proper planning is important. It's also worth noting that pandemic-era relief programs and stimulus-related credits are no longer available for the 2025 tax year. Finally, what happens if you don't file? Even if you owe zero U.S. tax, penalties for missing tax returns or foreign reporting forms can be severe. In some cases, penalties can reach tens of thousands of dollars. The good news is that many expats who have fallen behind may qualify for the Streamlined Filing Compliance Procedures, a program designed to help taxpayers catch up on missed filings and potentially avoid harsh penalties. The bottom line, most U.S. citizens living abroad still need to file a U.S. tax return, but with the right exclusions, credits, and reporting strategy, many expats can stay compliant without paying tax twice. If you're unsure where you stand, It's always worth understanding your filing requirements before the deadlines arrive. Check out our complete U.S. tax guide for U.S. citizens living abroad. Filing your 2025 tax return today. Link in the description below.